It's been a great 12 months for the gold price, but how much of a role has China played in the rise of the yellow metal? Hello, I'm David Jones from Capital.com, and I thought we'd take a bit of a different angle when it comes to this latest gold video. It's a market that's always popular with our clients because with us you've got a really tight spread in terms of the bid and the offer. There's no commission and there's no charge for deposits or withdrawals. It remains a really popular market with investors around the world. We've seen a great rise over the last 12 months. But I thought, let's try and examine some of what goes on in the gold market in a bit more depth. So I thought this time around, let's look at the role that China plays. So in this video, I'm going to talk a bit more about particularly the Chinese central bank activity over the last 12 months. In a second, we're going to jump on, take a look at what's been going on with gold over the last year. I'll come back and talk a bit more about that. Then we'll go back onto the platform, place a trade on gold to try and profit in the months ahead, and take a look at a different technical indicator that may help when it comes to trading gold. Before we do that, I'll just mention a competition that we're running this month. So presumably if you're watching this video, you do have an opinion on where gold might be in the short to medium term. So the competition we're running is to win a 30-minute Q&A Skype session with me where we talk about trading strategies, trading tactics, risk management, all that sort of stuff. To enter the competition, all you've got to do in the comments down below, leave your prediction for gold at the end of this month. So at the close at the end of September, one sentence why you think it's going to close there, and whoever's closest wins the competition. It's as easy as that. There's more details in the description down below, but let's catch up with what's been happening with gold over the short and medium term. Then I'll come back and talk a bit more about the role that China plays. Let's just remind ourselves quickly of the big picture view for the price of gold. So since August last year, the market's moved from 1160, traded as high as pretty much 1560 late August, early September this year. So major rise over the last 12 months. It's cooled off a little bit since then, but we're still trading not far off 6-year highs. I'm going to talk a bit more about the effect or the role that China plays in the gold market for a few minutes now. Then we'll come back, look at things in a bit more detail, look at a different indicator for gold, and then place a trade with a stop loss to try and take advantage of any price movement in the next few weeks. So we've seen a great recovery over the last 12 months, a bit volatile over recent weeks, but I think that trend is still up. We're going to go back and place a trade in a couple of minutes. But first of all, let's talk about China. First, London still remains the main hub, the main focus for the trading of physical wholesale gold. Some trading does happen in Shanghai, but it pales into insignificance when we look at the role that London plays. However, China is still the world's largest producer of gold. In the figures we've got from 2016, it beats Australia into second place. So back then, China mined something like 455 tons of gold versus 270 tons produced by Australia. So you can see it's quite a way ahead in terms of global gold production. When it comes to activity in the market, over the last 9 months or so during 2019, the central bank in China, the People's Bank of China, added 100 tons of gold to its gold reserves. This brought the total up to 1,950 tons that the People's Bank of China is believed to hold. So it's only slightly more than 5%, I suppose, over the last 9 months, but it is a trend that we have seen by central banks all around the world. And to speculate on the reasons why the People's Bank of China may be adding, I think clearly we all know the worries about the economic slowdown caused by trade wars, fears of recession, all this sort of stuff. But also perhaps there is an ongoing perception around the world among central bankers that the US dollar, will continue to maybe lose its appeal as the world's reserve currency, and central banks such as the People's Bank of China will look to maybe more tangible physical assets such as gold. So that could be one way of explaining really the activity during 2019, and clearly with central banks adding to reserves, this can only help the price, and we've seen that rise over the last 12 months for gold. Let's get back into it though. Let's get back in, take a look at things in a bit more detail, have a look at a different indicator for gold that may help us when it comes to trading, and get our trade on for the next few weeks and see how it turns out. So let's get back into this market in a bit more detail. So we do have this recovery that's been in place now since August last year. So we're 13 months into this. Let's just take a look at what's been happening recently. So the price did move as high as, what, 1557, so just shy of 1560 early September. We've seen it under quite a bit of pressure since then, dropping back about, what, $60, $70. But I think it's interesting that it has continued to hold above this low from mid-August. So the mid-August low is in around about 1478. So for now, I think we could just view this as a correction in price. So in the short term, I think the aggressive view is looking for a run back up to those 1560 highs on gold. Let's just take this chart out longer term, which was put us back at levels again not seen since March 2013, so a 6-year plus high. And after that, perhaps the next target is just above $1,600 an ounce, maybe up at 1620, those highs from sort of March 2013. But let's bring it back to what's going on now. So the more conservative trade here is waiting for a deeper sell-off, back maybe to that longer term trend line, which is still almost a couple of $100 below where the price is trading now. But let's do a more aggressive trade. But before we do that, let's take a look at another indicator. So I always have the RSI on these charts. You can see it down here, classic overbought, oversold. But let's add in another sort of popular technical indicator. Let's add in a moving average. So we've got our indicators up here. We'll click on popular. There's moving average. Let's add that in and talk about that for a few minutes. I'm going to change the color and make this a bit thicker so it's clearer. So we've got a layers up here and then just click on settings. So if you're familiar with it, the moving average is a classic trend following mechanical indicator. So to put it simply, this is a 20-day moving average. So it works out the average price for the last 20 days, plots a point on the chart, the next day it recalculates it. When the price moves above the moving average, it's said to be in an uptrend. So that the most simplistic way of using a moving average is to be a buyer when it moves above the price and to be a seller when it moves below the price. And because the price of gold has been trending so well, particularly since May of this year, the moving average has done a not bad job when it comes to buy signals. So I suppose if you wanted to be a bit more conservative here, the trade you would take is you wait for the price of gold to flip above the moving average again. The moving average currently coming in around about 1520. If we go back, the last time we had a signal like that was back here in August. You can see that strong move through the moving average and the price rallied about $100, $120 from there. So in a strong trending market, moving averages work well. Where they don't work so well is if the price is going sideways, because you're buy, sell, it's just flipping around the moving average. But for now, be interesting to see what happens if the price does move through that moving average again, 1520. Does it spark off the next leg higher? But for now, I'm going to place a trade anyway. We always place trades in these videos just to make them a bit more interesting. And maybe let's go for quite an aggressive trade here. Let's just zoom in to the hourly chart. So because this is an hourly chart, the moving average is still on there, but now it's a 20-hour moving average. So it's much shorter term moving average. And you can see over the last 10 hours or so, we have seen the price of gold pick up, get some acceleration, and maybe we're seeing it break out of the range it's been stuck in the last couple of days. Maybe we're seeing this downtrend that's been in place for much of September so far come to an end. So perhaps the aggressive trade here is to be a buyer with a stop loss either below those lows for September in ahead of 1480, or probably even better, the mid-August lows. Those mid-August lows are about 1478. So let's place maybe a more aggressive trade with a stop loss down at 1460 on gold. So that's the trade I'm going to do based off the hourly. You can see I've got a couple of trades running that are underwater so far from previous videos we did. We've got trading with charts enabled here. You can switch that on or off, but I've got them showing on the chart here. We'll take a look at the rest of the position. So it's not doing much to help our overall P&L at the moment, but let's place a trade now on gold with a stop the other side down at 1460, that sort of area. So I can click on buy up here. So the first thing I want to do is get my stop loss in. So I'm saying 1460 for the price of gold. Now, based on the current size that's set up in my dealing ticket, if I trade 1460 and if I trade where the market's trading now and get stopped at 1460, I'm going to lose £106 for all of these trades we've done on this account. I've been risking 2% of the account value. We started off with £10,000, so I just need to bump that size up. So my risk is more like £200 on this trade. So I'm going to get a size at the top and just change the size. So I've bumped the size up to 5.5 ounces. The market's just above $15.05 an ounce at the moment. With a stop at 1460, my risk is just over £200. So that's much more in line with the sort of trade size we've done before. And I'm doing this really because I think, well, maybe we're seeing the price finally break out after being under pressure from this sort of 1556 area. So my target would be a run back up, back up towards these 1550 plus highs. If I wanted to, I could set up an order to take profits up there, but I'm going to leave it run. My stop's in place, I'm ready to go. Let's click on buy. So as usual, my position has been opened. I get the confirmation in the bottom left. If I come out and look at the chart now, there's the position I just adding 5.5. You can see that's where the price is currently trading now. And of course, to look at this in a bit more depth, all I need to do is go to portfolio on the left hand side. You can see there's quite a few trades running on this account. And down there at the bottom, these are the various gold trades that have been done. The summary at the moment, I'm losing about or just over £60 on the gold trade. Stuff like silver and platinum have done much better. But let's see how this one turns out. So there's the latest one I did, buying 5.5 with a stop at 1460. I've tied up £335 in margin, and I'm down a couple of pounds on the trade so far because of the spread. Of course, there is a spread when we're trading. Our spread on gold, though, is a very, very tight one, making the cost of getting in and out relatively cheap. So let's see. We'll come back in the next video on gold that we do and see how this one has fared. Don't forget, there is that competition. If you give your forecast for gold at the end of the month and a sentence why, there's that 30-minute Skype session. And just finally, just to remember, the trades that we do during these videos, they are for educational purposes only. They're not financial advice, but I do think it makes it all a lot more interesting if we actually put some risk on when we're doing the videos. That's it for our update on gold. A slightly different angle this time around. I hope you found it interesting. Don't forget that competition. Just leave us your forecast in the comments down below on where you think the price is going to be end of September, and one sentence as to why you think it's going to be there. To never miss out on the content we produce on all these different markets throughout the month, just make sure you're subscribed to the channel by clicking subscribe. And if you click the alarm bell notification thing down there, you get automatically notified by YouTube whenever we upload new content. But from me, David Jones and Capital.com, we'll leave it there. Good luck with your trading.